Welcome back to Liberty and Finance. We're delighted to have Andy Schectman, the CEO of Miles Franklin Precious Metals, here with us this Wednesday, June 11th, 2025, for a live weekly market update. Andy, thanks for joining us again live on Liberty and Finance.
Good to be here, Dunnigan. Thanks for having me, my man.
And for those of you who want to get your questions in front of Andy, make sure that you're on YouTube on Liberty and Finance. Make sure you're subscribed. Click the subscribe button if you haven't already. And you'll see the live chat. Make sure you get in the live chat. Type your question for Andy there. We'll try to get those in front of Andy. We're going to talk about silver exploding northward in the past week here. We're going to talk about where gold is going, where platinum is going. We're going to talk about some rumblings about war from the State Department. And we're going to talk about viewers' questions that have been sent in and those that you're going to ask here today. So, Andy, with your permission, I'm going to kick off with try to share a snippet from a recent interview we did with Clive Thompson about where he sees silver is going and why he thinks we're maybe asking the wrong question in the end game. We're thinking about when would I sell my silver? He says, you're probably not thinking right if you're thinking you're going to be selling it back into the US dollar ultimately. Let's see if I can share this. One moment.
Sure.
I will try. Share. And here we go. Try to make this full screen. One moment. Here we go.
Unlike previous bull runs, the last one being from 2000 to 2010, which lasted a decade, I think this one probably has no ending until we have a new monetary system. So I think this is the final run, but it's not a final run where you can say it will hit a certain price. It keeps going until we don't have the currency which we use to buy gold anymore, and that effectively means that if you ask what the price will be, you'll be asking what the price will be in what will become eventually a defunct currency.
I hope that share worked. I hope.
It did. It did.
So, any
I,
thoughts from you on Clive's perspective of not asking how high silver will go in dollars because you're asking how high it will go in a currency that's becoming defunct?
I think what he says hits the nail on the head in so many areas that so much in the way of conventional wisdom relies upon everything being okay in the monetary system. Comes back to the fact that the United States has had continual prosperity and continual peace and calm. I think that's a valid point. When I think of the silver that I own, I think of almost exclusively trading it to gold at some point when the ratio snaps back. Now, that may not work either, but I agree with what he is saying. I mean, I honestly feel there's so many things pointing to a resetting of the monetary system. You can be as basic as Scott Dissent saying in an interview recently that there will be a new Bretton Woods monetary system style event within this administration. You can see the massive deliveries into COMEX and gold and silver. You can see so many things happening right now that are unusual. And then you look around in a system that is based upon trust. You see what's happening right now in Los Angeles and Atlanta and New York and Chicago and in Dallas and Austin. This is not lost on the rest of the world. It's embarrassing. We are a country that seems to, in my opinion, somewhat of lost its way spiritually, morally, culturally. We are, I thought this stuff was behind us, but it appears it's not. And where's the trust? When you look at trust politically, economically, monetarily, and then culturally, so many of the things that as a young man or woman in this country growing up, you would aspire to be, these things are changing. Our culture is changing right in front of us. And so I think that a new monetary system is not so far-fetched anymore. We've been saying this for a while now, but what Clive says is exactly right. My guess is that we are on the cusp of a new system. What does that new system look like? Going back into dollars is the last place I think that you would want to be. So if I were drawing a playbook, I would say when the ratio gets anywhere near 45-ish to 1 silver to gold, the play is to switch to gold. Ultimately, I think that is going to be sort of the tether to a new system, will be gold, whether it be with the BRICS nations or all the countries in the global east and the global south or here in the United States. I believe that the Trump administration said to President Trump, this needs to be done right now. We need to start bringing this stuff back. We need to start reshoring. We need to do this because we are losing rapidly to the rest of the world, who is wise to the suppression of the paper markets, which have been done originally to support the illusion of the strength of the Western system, the strength of the bond market. This is a game we are being beaten at rapidly, and I would agree with him. I don't think you can look at things, if you're owning gold and silver for the reasons that most people are these days, than to expect an orderly transition from silver or gold to another asset may not play out the same way this time. Granted, I think what it does is it gives you the ability to potentially sidestep any potential trouble in the legacy system, have dry powder, and take advantage of value and whatever that may be here in the United States. But to expect it to be linear the way that we've always expected things, I think is a stretch. So yeah, I guess we'll see. But I think people will look back at their gold and silver holdings and realize that this isn't about return on money, that this is about return of money. This is to sidestep all of the things that seem to be bearing down on this country and on this on the West all at once. I mean, even as far as the new payment system that seems to be happening with the bridge system that is connecting so much of the world, the renminbi bridge system, which is M-Bridge, they come very clear and come out and say it is not compatible with the dollar, the pound, or the euro. So they're moving in one direction, and by default, I think we will move in another direction as well. So yeah, if I had to guess, there's an equally good chance that we see a monetary system as we would seeing silver at the levels many people dream of. What does that look like? Only time will tell. It's very difficult when you're sailing in a sea of uncharted water to have an idea of where we go. But I would say it is closer to what Clive is saying than what most people would see in their mind's eye as to what the end game is.
Another aspect of that is that we are trying to remind everyone to stop thinking in terms of measuring our financial lives in fiat currency, not in dollars. Dollars are a shrinking, valueless yardstick that just keeps being eroded away. It's no longer what it was supposed to be in the Constitution, the Coinage Act of 1792, or any other Coinage Act after that. So we need to start thinking about real value, like what is gold and silver worth in terms of land and a home and food and fuel and vehicles and repairs and things that you need in your everyday life. And nothing comes closer that I know of to that thought process than when you sell junk silver, 90% constitutional US, 90% silver, and it's 10 dimes are worth $27, and people go, why? What's going on? And I think that brings that point home.
Well, and I didn't tell you this. I should have told you this off air, but I took the step of making an executive decision, and I lowered the premium on junk silver right now to 99 cents or $1. It's either $1 or 99 cents. Call it $1 over the price of silver. To me, there isn't a better value, period, right now, and a better way to protect yourself in an asset that is asymmetrically appealing, low downside, high upside. And we'll get into silver in a moment, but I don't know that there's an asset on the planet that, especially right now, has as much appeal to me as does silver.
You promised us that you'd give us an update in this weekly market update about not only silver, but also gold and platinum. So please have at it. We've got a lot of viewers' questions to get to, but if you could give us your view of where things are heading, both in the physical supply, demand, off-taking from the exchanges, and the relative movement and strength of those three types of bullion at this time.
Yeah, it's interesting. Go back and look, and you'll see, if you look at a chart, that since 2011, which was the last all-time high for silver, where it touched 50 for a cup of coffee, $35 has been challenged 7 times since 2011. That has been the resistance, and it has never broken through. It's failed every time since 2011. This is the third time in history we're this high. If you go back to 1980, you will see that silver was above $35 an ounce for only 40 days. That's courtesy of Vince Lancy and some of his work, and that includes the blow-off top. If you look on the Shanghai Metals Exchange right now, silver closed at $38.45 an ounce in Shanghai. This is the arbitrage, and we've been talking for months now about the arbitrage price, that the higher price that silver has been listed at in Shanghai versus the West, and it's acted like a magnet. We continue to catch up to it. My guess is we'll see $38 and change in the very near future. Doesn't mean we're not going to see some resistance along the way, because this is the second largest short position, to my knowledge. Chris Marcus was talking about that it's the second largest commercial short position ever in silver. They are fighting this. But he also mentioned something, and I want to give him credit for this because I've always thought Chris was a hell of an investigative journalist. And he came up with something very interesting. And he says, the way that these things are supposed to work is these massive short positions that they now have in the commercial banks on COMEX are supposed to be hedged, right? They're supposed to be hedged in London. And if that's the case, if that is the case, that would mean that the free float in London is only 7.5 million ounces, not the 275 million ounces that we have been led to believe. So either they are hedged 1-to-1 between COMEX and London, or someone has a massive short exposure as the price is rising. Now, I believe that someone would be Bank of America. And Ted Butler talked about that for a very long time, God rest his soul, that they had a 1 billion ounce short position in silver. And to my knowledge, it's never been flushed out. But we are talking about existential threat to some of the biggest players in the world in the silver market. The May contract, as we mentioned before, had the largest delivery in the history of the COMEX, somewhere in the neighborhood of 15,000 contracts at 5,000 ounces apiece stood for delivery on the May contract. But this is a pattern that we've seen continually over and over and over again. And so I would say to you that there's a big group of very sophisticated traders that are trying to hold this down, but it appears as though maybe they are losing control. I would argue they've lost control in gold, and gold has broken through. They both have that same cup and handle formation. Silver's is 45 years long. I mean, they don't get any more bullish than that. A cup and handle formation in technical analysis is supremely bullish, especially one that is drawn out as long as silver has. Gold has busted through the resistance. Silver, on the other hand, is right at the resistance. And closing above 35 on a weekly, which is amazing, is huge. Keep in mind, it only stayed above 35 for 40 days in 1980. The longer we stay above 35 is very, very big, and especially 36. We need to close the month above that. Once we do, I think you'll see a whole bunch of the institutional money, who is all technical analysis, jump on board. And this is one of these deals where one of these days, remember what happened to Bear Stearns, and remember the interview that we've talked about. Again, Chris Marcus, his interview with Bart Chilton, the former head of the CFTC, who talked about what happened with Bear Stearns' short position when silver went from $9 to 21, and in essence aided in putting them out of business. So to assume that this cannot happen to a large institution is silly. And if there were going to be a sacrificial lamb, Bank of America would certainly do the trick. You can only imagine the shockwaves that would send, not only through the commodity markets, but through the banking system, through the dollar system, everything. And so it's never been more important. This is not about becoming wealthy. I say this all the time. This is an asset that offers the greatest asymmetrical risk-reward profile I've ever seen. And I think now is the time to not get cute and wait for pullbacks. This is the time to do whatever the biggest money in this country is doing. those that are able to pull in that kind of value in silver is the same thing that China is doing, flying all around the world buying doré concentrate as the second largest producer in the world. It's the same thing India has been doing for 5 years, importing over 900 million ounces, which is more than the LBMA has and the COMEX in combination. And of course, Russia is saying it's part of their strategic stockpile. What we are witnessing, I think, is an awakening at the highest level in the value that silver offers and its strategic nature, not industrial. That's huge. And the charts are showing it, and the imports are showing it. This is as bullish as I've ever been on silver in my career.
That's silver, and it's remarkable times. We've been waiting a long time for this. Those of us who've been following it for over, a decade and a half or more, you've been following it a lot longer than that. How about gold and platinum at this time?
So there was an interesting article in regards to gold that came out by Bloomberg that said the central bank purchases, the majority of all of the central bank purchases, which they have been talking about continually as being the driving factor in the rise in gold, have been undisclosed. And the estimated purchases are as much as 3 to 4 times the declared purchases. This is coming right out of the mainstream. You have JP Morgan, who just came out and said that if just 0.5%, remember that number? Rick Rule always talks about that. If 0.5% of foreign held US assets move into gold in the coming years, it would be enough to push gold to $6,000 buyer before 2029. And then you have this person named Evie Hambro, the global head of thematic and sector investing, whatever the hell that is, at BlackRock, thinks that the gold market is large, but the dollar market is even larger. Even a small shift of funds from the dollar market into gold will have a massive impact. At the same time, the European Central Bank today announced that gold has overtaken the euro as the second largest reserve asset. And this is the same central bank that 2-3 weeks ago warned that the physical gold demand is a risk to financial stability. Why would they say that? Because the amount of gold that is traded on both the COMEX and in particular the LBMA is so rehypothecated that they have to go from T+1 to T+8 weeks. So understand on the LBMA, because they say there's a shortage of trucks, what I'm getting at is that the rehypothecation I've always said is being played against us. The standing of delivery is what is vastly different than anything we've ever seen. The traders who recognize that keeping the gold inside the system in the form of long contracts is a fool's errand. So let's stand for delivery before everyone catches up. And when the ECB comes out and says not only is it number 2, but it warned that the physical gold demand is a risk to financial stability, what does that say for the authenticity of the markets? It's pathetic. The last thing that I want to show you or talk to you about rather, and I will give credit to Bob Coleman on this one and to Gary Bohm, both had articles on this and graphs. It is what's going on with platinum. Now, as far as platinum is concerned, first and foremost, on June 6th of this last week, rather, we saw the highest volume ever in the history of the COMEX market, or the NYMEX, trading platinum. Huge volume, and it went into backwardation, which means that the current platinum value is worth more than the futures. The futures are always supposed to be more because of the time value of money. They're not right now because the demand for platinum is so high that there is a perception that there is a shortage of supply on the exchange. And so the premium for, this is the backwardation, for immediate delivery is higher than the futures. This is a ominous sign. And when you look at what Bob Coleman is talking about, he said that last week, the week of, what would have been June, that's when all the volume was, June 6th, June 7th, June 6th, 4.6% of the total physical platinum in the registered inventories on the NYMEX transferred out. This is the platinum that backs the futures contracts. And he just came out today, the most current data, and another 6.5% of the physical platinum in the registered category backing the futures transferred out. In the past 2 weeks, we've seen 11% of all of the platinum on the NYMEX market leave the ecosystem. At the same time, platinum's up over 20% in just a couple of weeks since we started offering it as a special. And if you look at the rising wedge that this is making, it is right near a bust out. What I'm getting at, whether we're talking gold, whether we're talking platinum, whether we're talking silver, something is very different. That very different not only is the price increases, but it's the deliveries. We are seeing deliveries off of COMEX, NYMEX in gold, silver, and platinum, off the LBMA, even off the Shanghai Metals Exchange. And the reason we see it coming off of Shanghai, Dunnigan, is because the Chinese have been keen for the past couple of years at promoting state-sponsored savings programs in metal. And we know that they've asked the insurance companies to start buying it. They've even told the banks who import all the metal they can increase their quota and are specific in using dollars to buy the metal. In other words, they want to put the dollars into the excess dollars they have into hard assets rather than into treasuries as they used to be. This is a massive shift, not only in the framework of the global monetary system, where treasuries are being forsaken for commodities in your own possession, but standing for delivery is something that never happened. I remember the first interview that we did in 2020 talking about this, and I talked about the introduction of the others, this group of reportables on the exchange that came out of nowhere. And I said to you, less than 1% of contracts my entire career have stood for delivery. Now this is becoming a habitual thing, and it's accelerating. So I would say to you that there has never been a more important time ever to own gold and silver. And you can see that because the biggest money in the world is not only massively accumulating. We've talked about the central banks forever, and now we're being told that it's underestimated by 2, 3, or 4 times, if not more. There was an article just the other day where it said that Chinese purchases over the last several months are 10 times understated. So when they assume these numbers, what the hell do they know? They don't know what numbers they really are. When China's going around and buying doré and concentrate, unrefined silver and gold directly from miners across Latin America, they're doing it to remain opaque. To remain opaque so no one knows exactly how much they're buying, it disintermediates the market. And the theory that is out there that I think is compelling is that what they have been doing, and Eric Young, King Kong on Twitter has talked a lot about this, is that there are entities that are shorting the paper price on COMEX, which is the price setting mechanism, and then accumulating physical all around the world at other non-price setting mechanisms. They short the price and then immediately purchase the metal at subsidized prices before the market recalibrates. So I don't know. I think, look, remember the end of the book, the little boy who cries wolf, the wolf comes. I'm right there on the front cover of the newer abridged version. I am crying wolf. One of these days the wolf cometh. And the acceleration, and then you look at all the stuff that's happening, here in the country. Again, we are losing confidence. We are losing faith. People are laughing at us again. We are a mess politically, monetarily, economically, socially, morally. All of these things that seem to be moving in the right direction. This other side, this horrible liberal left side that is doing this again. And again, I'm a liberal person in terms of social. Do whatever the hell you want. I come from a family where my parents were hippies. I'm okay with lifestyle, but all this stuff, this isn't liberalism anymore. This is way past liberalism. And we're told by Gavin Newsom that, everything's okay. It's peaceful, yet the Apple store is being robbed right in front and things are burning down and people are being hurt. This is more of the same stuff we saw for the 3-4 years preceding. And God help us, it just seems as though it's getting worse. Then I want to talk about something else that you mentioned at the outset, and I'll take any questions. Geopolitically, things are about to really heat up, I think. The U.S. Embassy in Iraq is preparing for ordering evacuations for all American personnel due to heightened security risks in the region. The U.S. State Department is preparing to order the departure of not all non-essential personnel from the U.S. Embassy in Baghdad, as well as non-essential personnel and family members also located in Bahrain, and Kuwait. And President Trump just said, the United States will not allow Iran to have nuclear weapons in response to reports that U.S. personnel are being moved out of the region. The reporter says, is there anything that can be done to dial the temperature down in the region? Trump said, Iran cannot have a nuclear weapon. Very simple. They cannot have a nuclear weapon. We're not going to allow that. A lot of people believe that Israel is going to attack Iran within the next couple of days. Now, I don't know that to be true, but I will simply tell you, I watched a podcast that talked about it, and now you're seeing all over Twitter reports that the State Department is ordering all spouses and non-essential personnel out of the region. You want to talk about a powder keg. That's it. And, just when we thought things were moving in a positive direction, here we are back in from the fire to the frying pan. And I don't know, man. I think it's never been more important. And maybe this is part of the reason you're seeing mass deliveries and mass accumulation by the big, sophisticated money. As the public, they're asleep at the switch. And that's the thing about where we are right now that is so horrible. So many people will not be able to get out of the way of what's coming because they never saw it coming. That's the funny thing. As the risk-on trade took off again in lieu of the risk-off trade, except the risk-off trade is what the biggest money in the world is doing. The Warren Buffetts of the world, the people standing for delivery on COMEX. Who has $8.5 billion to take possession of gold in the May contract? $4.5 billion in the March contract, where JP Morgan swore it was for a customer. Who's got this money? Who has the ability to take possession of billions of dollars worth of silver that's come in the last few months? Who? And ask yourself, these people who have that kind of money, do you not think that they're connected at high levels to know the information before the rest of the plebes like us get it? If you don't see these crumbs and you're waiting or looking at this as a profit play, you are missing everything I've been trying to scream at you all about for a long time. This isn't about getting rich. This is about protecting everything you've worked your life to preserve. So for me, if it's not in physical metals, I have very short-term treasuries, 6 months or less, and some mining shares. Anything else right now, to me, I think it is as risky as it's ever been, based upon all of the things that seem to be lining up. Sorry to go on a diatribe there, but I just need to get that off my chest.
No, that's fine because we teed that up since the beginning. We said you were going to talk about the State Department talking about geopolitical tensions, potential war or conflict with Iran. Part of that you mentioned, I think you implied, but you didn't say the word repatriation is the other thing. It's not just physical deliveries off the exchanges, it's repatriation of metals. You can see all of the biggest chess players are moving the pieces where they need to be prior to a coming storm. And you're right, the ordinary moms and pops are completely clueless. In fact, I had a client text me this week and said, Dunnigan, what worries you the most or what frightens you the most about the current precious metals markets? And my reply without hesitation was, I am mostly afraid of the exposure to ordinary moms and pops across the country of the United States and every country who are absolutely being distracted, misled, and unserved by their financial planners, by the mainstream financial media, into just being lulled into complacence, and they're just going to get steamrolled. The train is coming, they're on the tracks, and everybody's just saying everything's fine, nothing to see here, folks. The emperor has clothes on. I'm just so worried about people losing their life savings, losing their privacy, being forced into a dependency when they tried so hard to become independent. Now they're going to be back to being dependent again, and every move being tracked, with tracing and tracking, loss of privacy, loss of personal property rights. Any thoughts from you on that before we move on?
I echo everything you say. I mean, I heard Robert Kiyosaki said to me once, and it sticks with me, unlike just about anything I've ever heard, that people can't get out of the way of what they don't see coming. And that's right. The disservice that has been done to the American people by our media is borderline treasonous, and all they do these days is just foment divisiveness. I did an interview today, which I found to be very interesting, with a man named Nick Giambruno. And Nick has worked for a long time with Doug Casey. And the one thing that he said that I thought was wickedly interesting, he said, if you go back through history, when you see times of upheaval, times of chaos, it is typically preceded by large movements of gold from one place to another. And
Large physical movements. You're not talking about
yes,
necessarily price movement, but physical dislocation of gold,
yes.
relocation.
And that's what's happening right now. Over 40 central banks have repatriated their gold, like you said, from the Bank of England and the New York Fed, and they continue to do so. And then all of the deliveries off of the exchanges. And I mean, there's so much sense and logic in that statement. Is it ominous? I don't know. I mean, you can even go back and look at Roosevelt here when he confiscated gold. My friend Larry, who you know through NCII, Larry is one of the biggest importers of numismatic gold in the world, as far as I know. A lot of it coming from Europe. He has connections, vast connections in Europe. And ask yourself, how is it that so much gold found its way over to Europe by steamship prior to the confiscation? Where all of the elite were clued in, hey, you might want to send your gold over to the safety of the Swiss safe deposit boxes and whatnot. And, some of it was there prior to World War One or prior to the confiscation anyway, because all debt prior to World War One was settled in gold. But the point of it is that a lot of this stuff comes from the European central banks, where it was shipped over before gold was confiscated. A lot of it stayed there for whatever reason. And a lot of it comes back to this day. But I guess I just would simply say that whether it be a gold confiscation or, you hear a lot about people moving their gold to the United States out of Europe because of potential trouble that's brewing. Well, that's exactly what Nick was saying. And to the nth degree, I would say, if you look at the amount that's come in and the amount that's moved home across the globe, home being to whatever country is repatriating it certainly gives me pause, and I think it's something to pay attention to. Again, it's not about the price; it's about the movements prior to these things happening. And it's funny, all of the purchasing by the central banks, all of the movements, all of the importing, all of this stuff has preceded the massive price increases. So I would just simply say these people know what's coming. They don't spend this kind of money and go to this kind of what amounts to sophisticated maneuvering just for the hell of it, especially something as unconventional, perhaps, in this environment, in this monetary system, as standing for delivery on physical metals.
We have a comment here. In these times of unprecedented moves of physical gold across the Atlantic, etc., by Thomas Toops, who said, more importantly, store food and fuel. Seriously. So, folks, remember our roots here. Used to be called reluctant preppers. We're all about preparedness here so that you can keep your family in good standing through tough times. And so we have a playlist. If you go on to youtube.com/liberty and finance, that's where you are right now on this podcast. Look at our playlist called Home Sweet Prepared Home. You'll find timeless wisdom there from farmers like Joel Salatin to antique firearm experts like Rawls, Jim Rawls from survivalblog.com, etc. So lots of good. And of course, we've got Paul Helinski telling us how to use a rocket stove and all kinds of things. So if you want to know about preparedness and self-sufficiency, look at our playlist called Home Sweet Prepared Home. Andy, we've got
by the way, real quick, since the beginning of the year, I think people might find this interesting. The commercial banks, the ones that step on the price, they have bought back 147,000 gold contracts. That's 14.7 million ounces of gold. So these commercial banks, at least as far as gold is concerned, I think they know something's coming. And we'll have to see how it all plays out with silver. But I think they've given up every single time. I can't wait to be in my new studio, hopefully next week. It's done. They're putting the finishing touches on it today. So probably next Tuesday night, I'll be in my studio. But Wednesday, is it Tuesday? Wednesday night, I'll be in my studio. Anyways, that's 14,700,000 ounces of gold. Who has that kind of bread, and why would they be? Well, the banks do. Why would they be buying that back if they weren't concerned about where gold is ultimately going.
Because some people have to leave a little bit past the half part of the hour here. I want to quick let you hit the specials, and we've got because of you calling an audible earlier in this interview
Sorry
about
about
the
that.
premium. We got that covered here at the last one here. So hold on, we tried to pivot for you, and we're going to try to share real quick, and then we got viewers' questions all queued up here, ready to go in just a minute. Can you see this
Yep,
screen?
1/10 ounce gold Maple Leafs at 39.99 over melt. From a standpoint of gold fractional, I personally prefer coins over small bars. The very small bars, like a gram bar, if you hold it in your hand, it doesn't even feel like gold. These coins are, um, you know, looking at it and feeling it in 1 second. My favorite, as I said last week, are the Gold Eagles in the 10th ounce variety, but these are a better value price-wise. Phenomenal. I own a bunch myself. 1/10 ounce gold Maple Leafs at
Just to give
39.99
people
over
a
spot.
sense for these, they're about the size of a dime, but they feel heavier than a dime. Yeah.
Yes.
Also,
Silver Maple Leafs at 309 over. Purest silver coin in the world, again, following the Canadian theme. You can't ask for a nicer silver coin. 309 over, that's a damn good price considering where they've been for the last 5 years. Here's might be one of the more intriguing things to buy. The 1 ounce Platinum Britannia at 79 over spot. There is something going on with platinum. And look, it's 30 times more rare than gold. It's been suppressed for heaven knows how long. And it's interesting in the graph that I often ask you to pull up from Ed Steele.
yeah, I'll find it.
You see,
Give me a minute
platinum
here.
is, I think, the number 2 most shorted item on the COMEX market, COMEX, NYMEX combined. And so something's happening. The largest volume, there it is, I think it's number 2. The largest volume in the history of the market happened on June 6th. It's in backwardation. China is now adding it to their stockpile. There will be a 1 million ounce shortfall, at least for the second year in a row. And the majority of all the platinum mining comes from Russia, South Africa, and I want to say Zimbabwe, I think. But none of these places are North America. So
Well, and besides the
platinum is finally starting to exert itself.
top two being Russia and South Africa, both having a real
Right.
tensions either internally or externally with the U.S. So big deals on could potentially affect the supply.
It's beginning to exert itself. Yes, it is. And that, for I think the people who have held platinum for a long time and been very disappointed. Our mutual friend Maurice Action Jackson is the platinum king, and if he's watching this, I'm sure he'll be happy to see what platinum has done. And this is coins are really hard to get these days in platinum. I don't even think the U.S. Mint has made Eagles yet this year, which they've done a horrible job of making over the last almost decade plus in platinum. This to me is very intriguing. People should own some platinum in their portfolio. This is more of the profit side. But here again, you can see that the central banks or whoever it is standing for delivery, whoever it is pulling it off of the NYMEX, platinum is about ready, I think, to exert itself. And from a technical standpoint, it's busting through a long, mature consolidation pattern.
And I was just telling a client today who was waffling between platinum bars versus these platinum coins on special that at $79 over spot, these are government minted, sovereign minted platinum coins at the same price premiums as bars. So why not go for a single source where everybody knows the pedigree of a coin that's got
100%.
Yep.
100%.
Here's your Silver Engelhard.
So these Engelhard rounds are very intriguing. They're roughly the price of Silver Eagles. They've always traded that way. They are highly prized by collectors, and they almost always are in exquisitely nice condition. Engelhard they're not in business anymore. They don't make these, but for whatever reason, the Engelhard Prospector, which for my entire career have been prized, are really, really, really cool coins or rounds. They're not the savings that you get in the Buffalo round or the Morgan round, but from a standpoint of people who want something truly unique that is highly sought after and has been my entire career, this is for you. 479 over spot on the Engelhard rounds. when they're gone, they're gone. They haven't been made here again since 1986. So, this came out of someone's stash anyway.
And here's your calling and audible tonight.
I like how you did that. Yeah, I mean, at a buck over, you guys, a buck over on constitutional silver, dimes, and quarters, there is no better value, period. Exclamation point. There is no better value in silver. Remember, during the pandemic, this stuff was second only to American Eagles in premium buy and sell. So for me, the two things that stick out on this week's specials would be the Platinum Britannias and the Constitutional Silver, 100%.
All right, I got a few viewers' questions. Let me stop this share. We're gonna go to viewers' questions right now.
Sure.
And these have been submitted during this chat. Actually, Jim Jackson says, what locations are your segregated storage located for access?
Hey, Jim. It's interesting. I'll get into something in a moment, but we have Montreal, Toronto, Vancouver. We have Los Angeles, Dallas, Texas, Salt Lake City, New York City, and Miami. Now, the Miami thing, we are not taking any new clients at all until at least November. There's all sorts of confusion right now on the way this new legal tender bill was drafted. And it has to do with insurance and whether or not we will be able to continue to keep stuff in Miami. We are hoping we can, and we're dealing with state officials right now on that because of the way the new legal tender law is written and the protections that they put into place. So Miami has actually been pulled off of our site temporarily. And I actually am really, really trying to get on a Florida, I guess you call it a panel, or a consultant group that will meet in Tallahassee with the legislature to go over nuances to this industry that they don't quite understand. So I'm going to try and do my part for all the people in Florida who enjoy storage in Miami. We might be the only company in the state of Florida that has a storage facility with Brinks. In fact, I know we are in Miami. I don't know of anyone else that does, period. But so Miami's off the grid for now. So that would be Dallas, where, as far as I know, we're the only ones at Dallas Brinks, Salt Lake City, Los Angeles, New York City, Montreal, Toronto, Vancouver.
And we also have a partnership with Fargo. And so we've got
DDC and Fargo. Yes, that is good. The Dakota Depository. We keep, they are one of my logistics centers. I have worked with the family for 34 of the 35 years I've been in business. They are the most honorable people I know. We've done it on a handshake. I've never raised my voice or even got aggravated with them. So they have nothing but my most sincere respect. That's not our program, but we have millions and millions and millions and millions of dollars of inventory there. I've worked with them literally over half my life. So well over 2/3 of my life. I love them, and I have nothing but good things to say. So yes, we do have a relation with the Dakota Depository in Fargo.
We have a question from a viewer. Is Bullion Vault Storage federally regulated?
Yeah, it is. There's all sorts of regulations that must be adhered to. Absolutely. And that's why there aren't that many facilities that do it. So I mean, if it is known as a bullion depository, you use some of these third-party storage facilities where where it's in a strip mall and whatnot. That's not the regulated stuff. But yes, a place like Brinks or a place like Dakota, yeah, they have all sorts of federal mandates that they must, whether it be with security protocol, insurance protocol, all sorts of things must be adhered to. And now in Florida, it becomes even far more constraining, and that's kind of why we have to put things on hold in Miami for that reason until we are able to meet with the folks who drafted this bill and go over it, because they have clauses in there regarding insurance that is difficult for us to reconcile with. So we're getting to that very shortly.
Can you help make the distinction for us? Because you've mentioned several times in the past when we talk about rather scandalous behavior of some predatory dealers, you said, unfortunately, the bullion industry, or fortunately or unfortunately, the bullion industry is unregulated, and that's why there can be some of these getting away with some of what they do. How can you make the distinction so we can understand it between that and the vaulting industry that you just mentioned that is federally
Well, I
regulated?
mean, there are laws in the Dodd-Frank Act that says you have 30 days or 28 days or 30 days where you have to deliver metal it has to leave your facility or it becomes a futures contract in essence. So selling metal in a non-regulated industry is one thing. Storing metal, we have somewhere in the neighborhood of I want to say at these numbers, $700 million worth of metal stored in the 9 vaults, 8 or 9 vaults. I mean, that has to be regulated. And so it's when you're safekeeping a bailment type of situation, that's different than selling it. Vastly different. So the industry itself in purchasing is non-regulated. Storing and safekeeping people's assets is a different story altogether.
All right. We have another question here from John Otto. Pre-33 gold or eagles and buffaloes? Which do you prefer and why?
Yes, would be my answer.
Both and all of the above.
I mean, I love them all. And I guess from a standpoint of straightforward vanilla ice cream, it's the Eagles and the Buffaloes. From a standpoint of potential, history, Americana, it's the pre-33. I love the pre-33, and I will tell you that the premiums on them are enticing enough for me to put them in the same sentence with Eagles and Buffaloes. Most of the first quarter of my career, no one bought Eagles and Buffaloes. $350, $400 gold back in the late 90s and early part of even all through the 90s. A gold eagle with $400 gold would have been 4.25, and a 62 grade $20 Liberty or St. Gaudens would have been 460. So it was still, it was a 10% difference, but at $40, no one bought gold bullion back then. They only bought numismatics, myself included. And I have a very strong affinity for them. You need to know what you're doing. There are companies out there that try and get you to buy rare dates. That's not what you want to be doing right now, unless you have a good deal of common dates and gold eagles and buffaloes underneath it. I think you can buy numismatics, but the word that I use is semi-numismatics, which would be a strike and balance between content and premium, anything 64 grade or lower in St. Gaudens, 63 grade or lower in $20 Liberties. You're talking at these price levels that we see right now on par with gold bullion coins, which is something that I will say I've never seen before in 35 years of business. So when the time is right, like it is right now, yeah, I would entertain pre-33. But in general, if I want to keep it simple, stupid, KISS, it's gold eagles, gold buffaloes, which to me you can never go wrong with.
Yeah, that's a real good point. As long as you mentioned how close, unusually close in premium, the pre-33 modest grades are compared to modern bullion coins, we can still discuss swaps with people if they're interested in that, or gold to silver or silver to
And
gold.
all of this stuff done again can switch in the drop of a hat in this environment, this very supercharged environment we find ourselves in. So yes, you said it exactly right. But like a lot of the things we've talked about that change very quickly in this period of time, right? This particular period of time right now, they are attractive.
We got another question from Christopher Smith. Mr. Schectman, do you think of having 24 karat 1 ounce gold bars versus 22 karat 1 ounce gold eagles is a better play?
Well, that's a big misnomer. Who's Mr. Schectman? I always look around when someone says that. That's a misnomer because American Eagles have 1 ounce of pure 24 karat gold in them, as do the Krugerrands, which are both 22 karat. They have 1 ounce of pure gold, but 1/10 of an ounce of alloy sprinkled across, whether mostly silver, a little bit of copper in the Eagle, mostly copper, I think a little bit of silver in the Krugerrand. But the point of it is that the net weight of the Eagle then becomes 1.1 ounce. So the purity drops to 22 karat. You melt it down, you have an ounce of pure gold in it. So for me, 10 times out of 10, 11 times out of 10, I'd rather own American Eagles than I would a 1 ounce gold bar. Period. End of story. Um, the purity is a misnomer altogether. So I always use the analogy or the kind of the little story that if you were playing poker with your buddies and you're playing real high stakes and you got a stack of gold eagles in front of you and a stack of gold buffaloes in front of you. Now, the buffalo is the sister coin to the eagle, but it's pure gold, 24 karat, 1 ounce, period. The eagle, 1 ounce of pure gold and a tenth of an ounce of alloy. At the end of the night, the buffaloes will look 100 years old, going back and forth and stacking them like you do your poker chips. The eagles will look brand new. That little bit of alloy, which increases the net weight, decreases the purity, is enough to keep them looking great in a game of poker, or dropping it on the floor, or letting your friends hold them and feel them. So for me, purity is irrelevant. The carat is irrelevant. It's the amount of gold that matters. And the American Eagle is, especially with these legal tender laws being placed in Florida right now. I was with Daniel Diaz yesterday. We were doing something, I think, for the History Channel in Fort Lauderdale. And I know you and I did a show with him recently. And Daniel said, Andy, the law is even worse than I thought. I said, what do you mean, Daniel? Remember when we did it last week, he talked about bars that had any images on it, like the bars that Costco have sold, the Lady Fortuna, they would not be eligible. This is why I need to go meet with the legislature and open their eyes, because he said it's way worse than that, man. He says even serial numbered bars are ineligible. It can only say 24 karat gold, 1 ounce. If it has a serial number, which almost all of them do, or an image, it can't work. So in essence, it's American made coins that are pretty much the only thing that's going to work in the state of Florida. He also mentioned that Texas was, going to adopt something similar, and that's still up in the air. But the point of it is that for me, with states waking up and their constituents to, at some point, maybe really waking up to gold and silver as legal tender, for me and my money, I'm buying American-made stuff if I have my druthers. And I know we put Canadian stuff and UK stuff on special. It doesn't mean you have to go that way. But if you're in a state like Florida, or some of the 11 states like Texas and Arkansas and Oklahoma and Idaho that have these things in front of the legislature, you may want to think about the wisdom of owning American stuff over foreign stuff, even if it's at a savings. The potential benefit down the road may outweigh the savings up front.
The harder that I pushed Bill Holter, former partner of Jim Sinclair, God rest his soul, he says that the story that he heard from Jim Sinclair, who had family members with connections into Goldman Sachs, et cetera, is that in the end, it will make a difference, and you're going to want to have U.S. mint lineage. That's about as far as I've been able to get. But it's interesting. He says no matter what country you live in, you should probably have the coin of the realm of your country where you domicile if you want to be favored.
He means it too. I don't know of another guy. He's a friend, a good friend. And I don't know of another I've spent a lot of time with Bill, and I don't know another person on this planet that is as straight of a shooter as him. He will never lie to you, and you will always know where you stand with him. And whether that's personally or professionally, he's the same dude on camera and off.
True. One more question, then I think we're going to need to wrap. Felix the Cat says, Andy, do you have a plan of swapping silver for gold, and at what levels of gold silver ratio do you think we'll ever see 40 to 1 again?
I do. I think about it all the time. I don't know what that number would be, but at 45 to 1, which is pretty well near the average of the past 100+ years, that's easily a double. I think pigs get fed, hogs get slaughtered. So if I had let's say this is use 100 ounces to make the analogy, maybe I trade a third of them at 50, a third of them in the 40s, and wait and see if it really does go lower. And from a standpoint of potential, there's no reason to think that it certainly couldn't go lower. In 2011, I think it got to 37 to 1. So yeah, I am. And I think the one thing you don't want to do, if this is in your plans, is to get greedy. So cost average your way out into gold, to guarantee or to remove some of the uncertainty in potentially missing that trade.
And we've got one more that's a comment rather than a question. Oh, dang, I got to get back to it. There's so many good stuff in the chat here. This one says, he says, Andy, thank you for having such a great company to work with. So anyway, that's a thank you from one of our viewers
Thank
who's on
you.
is on the chat. And everyone else on the chat, thank you for being here. You're the ones that make this possible. Without you, this would not be
Let's pull an
a
all-nighter,
business market
Dunnigan.
update.
Let's do this till the sun rises. Wanna?
Actually, we're traveling, and if I don't get back to what I got to be doing, if you keep
I'm
traveling, man, we
teasing
got
you. You
miles
know,
to
I
go.
need a friend, man. I need a friend.
Well, you got a lot of those. You got, I'll tell you how many you got right now in the chat. You have 1,160 friends right now in the chat, and by the morning, we're probably going to have about 5 to 10,000 more who've taken the time to spend with you and with us here on this live chat, guys. We really appreciate everyone being here. Please, oh look,
This is
tell
who
the name
makes all
again.
the noise. This is Mila. This is the third dog, as two wasn't enough for my family. This is the one who makes all the noise, and she doesn't just bark, she screams. I've never heard a dog bark with it. She screams. And I don't know about you, one last thing, and I'll let you go. There's this, I may never eat a Wendy's hamburger ever again. I haven't had one in I don't know how long, but they have this commercial that comes on Fox, and the commercial starts with the Ring doorbell. Someone's Ring doorbell rings, and it sounds just like if you have a Ring doorbell like I do, it rings. I was watching it the other night at 1:30 in the morning because I couldn't sleep, and she went mental. My other two dogs go mental. They jump up, they run off the bed. My wife said, "Whoa, whoa, whoa." Anyways, first I thought for a moment someone was at my door, and then I realized it was the commercial. So, anyways, this is the loudmouth Mila,
Oh,
but
what a
she's very
sweetheart.
sweet.
Oh my gosh. Oh, just too cute. Too cute, Andy. We hope you'll let her visit the studio. I know you said you won't, but we're gonna keep our fingers
Yeah,
crossed.
I might. You never
All
know.
right.
But the
All right.
studio, I am hoping that next week, because it'll be done by Friday this week. Tomorrow it should be done. I'm hoping that next week that's where I will be. You know, it is 9 o'clock at night here in Florida. The studio is about 20 minutes away. So 50-50, but that is where our new offices are as well. So I will be there more often than not. I
And
get the
for those
hiccups
who
all of a
want to
sudden.
hang out with Andy and me in person, we're going to be looking for each and every one of you at the Rule Symposium in Boca Raton, Florida, July 11th, 7th through 11th, 7th through 11th. So I'll put a link in the description of this video so you can register for that and support Liberty and Finance along the way. You'll see Andy there live. You'll see Dunnigan Kaiser there live. Happy to spend some time chatting with you there. And that's going to be the place to be, July 7th through 11th in Boca Raton. If you
I'm
can't make
looking.
it in person, you can still register at a much lower cost for the live stream and recorded access. So there's no reason not to. It's got tons of good content. Thank you, Andy, once again for being here with us on Liberty
You
and
know, it's
Finance.
crazy how fast an hour goes by, man. But especially I don't shut up. Anyways, you're the best. Done again. Thank you, everybody. God bless, and look forward to picking up where we left off soon.
Take care, everyone. God bless all of you.
Bye bye.